Fed's interest rate decision. You may already know that the Fed kept rates on hold again. But what came out of Powell's mouth? Our colleague Jerome remained steadfast in his approach, even in the face of a robust labor market, noting that this won't stop him from lowering rates. Even though some recent inflation data is higher, it doesn't change the overall narrative that inflation is on track to gradually decline toward 2%. What's more, he indicated that a good reason is needed not to cut rates, rather than one to do so. This has been music to the ears of the market. Why are you interested? With up to 0.75 points of cuts in 2024, the market's prediction is only half fulfilled, and Powell tells us that the economy is neither very weak nor extremely strong. What did insiders do? Winners. SP 500. Goldman Sachs sees a bright future for the S&P 500, betting on a year-end close at 5,200, with eyes on megacap tech that could propel it up to 6,000. Between rate cuts and their hype, the index is already going from strength to strength. The secret? We're not in a bubble zone. But if interest rates change without bringing down the economy, get ready for liftoff. Losers. Sportswear. Nike and Lululemon stumbled financially, falling 8% and 17%, respectively. Nike reinvents itself by leaving behind the old models for trendier sneakers, while Lululemon sees the thirst for its premium athleisure diminish. Both brands, looking to maintain their spark in a belt-tightening market, face the challenge of justifying their premium prices. US sues Apple for illegal monopoly over smartphones. The US Justice Department and 15 states have filed a lawsuit against Apple, accusing it of monopolizing the smartphone market and raising prices. Apple joins the list of defendants, including Alphabet, Meta Platforms, and Amazon.com, in a plot that plays out between administrations, from Trump to Biden. The lawsuit aims to dismantle Apple's kingdom, forcing it to give users more choices about how to use apps with its hardware. Apple, for its part, defends itself by saying that this move threatens its essence and could curb its ability to innovate. Why are you interested? While it's not easy for Apple to lose the stage, it's complicated by a history of legal challenges in other countries and pressure from competitors clamoring for a piece of the digital pie. Intel and Disney want to be great again. Intel is rolling the dice with a $100 billion spending plan in 4 US states, after securing $19 billion in federal grants and loans. And hey, it's going for $25 billion more in tax breaks. The grand 5-year plan includes transforming empty fields in Ohio into the world's largest AI chip megafactory by 2027. In an epic battle of giants, George Lucas, Jamie Dimon, and the descendants of the Disney family have come together in a common front. They back Bob Iger and Disney's management team, marking a defense against hedge funds Triton Fund Management and Blackwell's Capital. These funds critique Disney's lost creative spark and slow technological adoption, seeking board seats to revive the magic. Housing and oil reaching new highs. Single-family home construction in the US soared in February, reaching its highest level in nearly 2 years, thanks to mild temperatures and a chronic shortage of existing homes. Despite high mortgage rates, builders are working magic with discounts and incentives. And beware, construction could give economic growth a boost this year. Oil is on fire, hitting multi-month highs. The reason? Ukraine's attacks on Russian refineries and the potential global shortages this could cause. Starbucks leaves their NFT loyalty program. With Starbucks' decision to scrap its NFT-based loyalty program, news has emerged. It was Polygon that released $4 million to launch the blockchain-based loyalty program, Starbucks Odyssey. Although Odyssey managed to sell NFTs for 100 each in the end, the project felt more like leaving your coffee forgotten on the roof of the car, a good idea in theory, but disastrous in practice. Reddit IPO, their public debut. Reddit took its stock market debut by storm. The company achieved a juicy valuation of almost $9 billion in its debut. From San Francisco, the company said big or home, with the goal of raising $748 million. This leap into the market has been a dream for more than 2 years, and although the road had its bumps, the tech moment could give it the push it needs. Is Japan rising again? After years of pampering its economy with negative rates, the Bank of Japan got serious, raising rates to an exorbitant level of 0.1%. But what's next? Imagine Japan on a tightrope, trying to balance the desire for more spending with the fear of runaway inflation. But what about the yen? After the announcement, he went on a trip, reaching new heights that even party balloons can't reach. This might be music to some's ears, but for others, it's the sound of an annoying alarm clock. Looking to the horizon, the BOJ's big challenge will be like that of a juggler on a cruise ship on the high seas, keeping everything in the air without throwing the economy overboard. If they manage to balance rising wages with spending and inflation, we could be witnessing Japan's economic revival. Why are you interested? Japan is the largest holder of Yankee debt overseas. Whatever happens in Japan is felt in New York. Intel, AMD and Microsoft say goodbye to the Chinese market. China has decided it's time to do spring cleaning on its PCs and servers. They started the week by saying goodbye to microprocessors from Intel and AMD, and also leaving Microsoft's Windows operating system in sight. In a shift to local, the Asian giant is opting for homemade alternatives, labeling them as safe and reliable. This is like preferring Chinese green tea over an Americano. Intel and AMD have yet to let go of this pledge. Why are you interested? China accounts for 20% of AMD's revenue. A low blow to those involved in this matter. China new priotities. From bricks to chips to AI, the story of the West told in Mandarin. The high-tech sector is hot on the heels of real estate and could become the new popular boy in the Chinese economy by 2026, according to Bloomberg Economics Brainiacs. Nearly 19% of China's GDP could come from gadgets and Brainiacs programming, up from 14.3% last year. And to put the news to the pack, this sector is already generating a final demand of about 18 trillion yuan. Not bad at all, huh? But be careful. Between the risk of a technological divorce with the West and the pitfalls of innovation too dependent on the government, China's high-tech sector has to navigate carefully. Why are you interested? If the sector manages to dodge the obstacles, it could push the Chinese economy into the major leagues and more than one portfolio to highs. Apple and Baidu working together? There is a marriage that may not please governments or competitors. Baidu is on fire. The reason? Rumors that he's going to be the AI mastermind behind Apple's new iPhone 16 and other gadgets in China. It seems that Apple gave Baidu a swipe right after flirting with Alibaba and another local suitor in the world of AI. Why not Google? Chinese law says that AI models for products sold there have to be locally made. Why are you interested? If this collaboration is real, it's not only a half-court wonder goal for Baidu, but it also puts Ernie Bot, its AI star, on the global map thanks to the world's most famous manzanita. Debt crisis in Europe? The debt of the Euro countries is heating up, and who has decided to join the party? These bigwigs are investing like there's no tomorrow, taking advantage of the European Central Bank stepping aside. They now handle 55% of European government bond trading volume, according to TradeWeb. Their presence is causing some to scratch their heads about the impact they have on the market, especially since they don't have to follow the same rules as banks. Come on, they can run out of the party before the snacks run out. Why are you interested? With the ECB removed from the movie, if this supporters club decides to sell its bonds at some point, then hyper-indebted countries such as Spain could see things very black and the costs of that debt skyrocketing. Brussels against the US big techs. First round in the fight between the Brussels bureaucrats and the US big techs. Apple, Alphabet's Google and Meta have been the first victims of the Digital Markets Act that went into effect on March 7th, so they will be investigated for possible monopoly. If they go overboard, they could face fines of 10% of their annual global turnover. The tech titans haven't sat idly by. They have mobilized thousands of engineers to comply with the new standard. However, the European Commission gave them a can-do-better look, especially when it comes to giving users and rivals more options. Why are you interested? Although there is nobody slower than the EU, the things that may come out of this investigation will pupate, and this also encourages regulators in other parts of the world